Welcome to Chapter 4, Technical Analysis. See, now you know what stock market is, how stock market works, and how to pick stocks for longer run. Now, let us understand what are the kind of people they come to stock market. Of course, there are many kinds, but I will explain you top 2 or 3. One is you, investor, who is here for long term. Number 2 is a trader. He comes, but he is not here for a long term. He will buy today, sell tomorrow, day after tomorrow. Why he does that? He is a guy who provides liquidities to the stock market. Now, if you don't buy and sell every day, you may not get opportunity or a lot of bids available ready for you to dispose of your stocks. There are also third kind of people who are known as arbitragers. Now the name itself is very technical, but they do buying and selling today itself. So they buy from one market where it is cheap and sell in another market which is where it is trading expensive. So they are the key people who support in price discovery mechanism. Now, if we talk about technical analysis is more useful to a trader compared to a investor. So if a trader comes and he wants to understand that how this stock will perform today, tomorrow, this week, this month, and maybe 3 months. So there is a proper science where the price movement of a stock is plotted on a graph, and graphically these price points are put together to extrapolate or predict that where will the movement of the stock price will go. Obviously, this is a combination of a lot of statistics, news, sector analysis, economic environment, announcements by the government, demand and supply of stocks, various different price levels, liquidity in the stock markets, availability of market participants, on and on and on I can go. So in a shorter run, there are large variety of parameters which would influence a stock price. Now, I would like to warn you that unless you are a properly qualified stock trader, you should not venture out into this, because it is highly likely that you will lose a lot of money or all of your money if you try to do short-term trading. Now, if we want to understand technical analysis in detail, there are many courses available on this platform and many other platforms. There are experts who can guide you in how the charts are created, what are the different types of charts available, and how can you use these tools to understand the movement of stock prices and various parameters affecting the movement of such stock prices. Also, in the screenshots you will see I have used the charting tool which is freely provided by Bombay Stock Exchange to analyze various stocks listed there. So basically, technical analysis is for short-term traders, not for long-term investors. Most of the time, it focuses on predicting the near future movement in the stock prices of a particular stock. Also, there is a concept called as index, or in plural we call it indices. So you have Bombay Stock Exchange where you have Sensex, there is a Bankex, there is a small cap index, and so on. In National Stock Exchange we have Nifty and then host of other indices. So what is this index? Index is nothing but weighted average price of 30 stocks in case of Sensex and 50 stocks in case of Nifty. So that particular number or the weighted average number of these 30 or 50 stocks indicates the movement of the stock market in the short run. And a lot of technical analysts also track the movement of not just individual share prices but also the movement of these indices, because in general these indices are known as economic barometers of the country, and the movement of these indices will actually show us whether our country is progressing or it is going through a recession or it is in slump, or is it peaking out. So these indices are very critical for any investor or a trader to understand what is the in general scenario of the economy. Now, when we say recession or growth or boom or slump, these are known as trade cycles. These trade cycles in general affect the price level of every commodity and shares in the economy. And the movement of these indices are considered as early indicators or leading indicators of the situation of the economy. Hence, when they are put up in a chart and extrapolated, you can get a lot of meaningful information on the direction where our economy is going to progress in the future. This is true not just for India but for all the countries. So major countries which are so-called developed have very active stock markets, and each stock market would have their own indexes. So we have Nasdaq in US, we have Hang Seng in Hong Kong, we have Nikkei, we have FTSE in UK. These are some of the indices where in the short run, technical analysis using charting and graph tools, you can come up to understand in which direction the price movements are heading. In the next chapter, we have something more detailed to be learnt upon, something more exciting coming up your way. So I am looking forward to seeing you on the other side, and let me tell you, if you are able to remain with me till the end of this course, you will find the value in such a way that it will make you a better investor and you will start making money at the end of this course itself.